we ended up buying a 4-bedroom, 3-bathroom house during a pandemic. And guess what? You can too. Today, I'm getting ready to share all the tea about our house buying journey. And I'm going to share who my personal loan originator was so she can help you out too. I'm telling y'all, this year you will get in that house. So if you want to know all about the process, then make sure you stick around. What's up, guys? This is Monique and welcome back to the channel. If you are new here, welcome. Thanks so much for stopping by, but don't just be a stranger. Go ahead, hit that subscribe button and join a family. Why? Because here we go everywhere in life together and all we do is win. So who's ready to buy a house? If you are currently working on getting that house, drop it down in the comments below. If you already bought your house and you looking to upgrade, then drop it down in the comments. Shoot, if you just in your house and happy where you at, let me know. I'm just trying to see where everybody is on this journey. So we ended up closing on our home on September 21st of last year during the pandemic. Yes, in the heart of it. And believe me when I say it was definitely a journey getting to that point. There were several times that I thought we were not going to get that house, but God. And guess what? We ended up getting it. The journey started for us back in January. I ended up coming out to a subdivision that I saw was being newly built, and I wanted to check it out. So me and my mom drove out to look at some houses. But I did not know me just looking at how the houses were being built was going to turn into me actually purchasing a home. What ended up happening was when I got there to look at the model homes, I talked to this amazing sales associate. She must have been amazing because she sold me a house, okay? But anyway, in the middle of us talking and me viewing some of the homes, she just went on ahead and brought me to their in-house lender. And with me talking to the lender, she sat me down. She was like, okay, you know, Monique, let me just see where you are so we can see where you need to go. At that point, I'm like, you know, I'm kind of iffy about it. I don't want to mess up my credit by pulling it, and I'm not at a good point. But she said the only way we can find that out is if we just take a look. So I was like, all right, I was very reluctant to do it, but I was like, okay, just go ahead and look. For the last about 4 or 5 months, I had been working on my credit. So I know it was getting better. I just was not sure if we had gotten to the point that we were ready to be doing this part of the process. So she gathered some of me and my husband's information, you know, was asking stuff about salary and all that good stuff. And then she put in some information in her computer, and next thing I know, she looked over at me and she was like, congratulations, you've been pre-approved. I've been what? I had no idea that this was about to happen. So I'm super shocked, but at the same time, I'm so excited because I mean, this is what me and my husband had been working towards doing. But then guess what? Reality hit. My husband had no idea that I was out here getting pre-approved on a home. I just told him I was going to look at a home. But guess what? Y'all know, ladies, how we could butter them up and get what we want. So anyway, told my husband he was excited about it. Everybody on board. Things looking great. Let me just add this part right here. As far as your credit scores go, what you need to purchase a home. I recently talked to my loan originator and I asked her a couple of questions because I wanted to make sure I bring you guys the most accurate information at this time. So I ended up asking her, what would a good score look like at this point for a person to go ahead on and start that process for buying a house? So what she told me was, if you want to get a conventional loan, then your score needs to be a 620. She said for FHA and VA loans, the score used to need to be a 580, but due to current events, you know, the pandemic, COVID, all that going on, the score has increased for most lenders to a 640. But their company will work with you if you're at a 600 to get those FHA and VA loans. But as you know, the higher the score, the better the package is going to be. You know, the better those interest rates are going to be. So just keep that in mind when you're moving forward in this process. But anyway, so for the past few months, we have been working on our credit, like just, you know, putting our all into getting it together. Now, at that point in time, we knew we were absolutely nowhere near what we wanted our score to be, but it was enough to get the ball rolling. So we were excited about that. So when the mortgage lender pulls your credit scores, you know, you have 3 scores. What they end up doing is they take the middle score of the 3 scores that they pull. So if you have a 700, a 650, and a 600, your middle score is that 650. That's the score that they use to qualify you for loans, okay? Now, when you are buying a house with another person, with your significant other, spouse, whomever, what they usually do is they take the lower of the middle scores. So basically, if of the middle scores, mine is a 600 and his is a 700, then they will go with the 600, which is the lower one, to qualify you for the loan. That's another thing you want to keep in mind. You want to get both people's scores up, because they're going to look at both of you guys if you're getting that loan together. So my middle score ended up being a 666. I wanted to fall out the chair when she told me that. I'm like, the devil must be tap dancing on my credit score. I'm working hard to get it up, and here he go playing these numbers. So with that 666 credit score, that gave us an interest rate on the loan of 3.75, which was not horrible, but it was not what I wanted. I wanted the lowest interest rate I could get, because the higher the interest rate, the more money you're going to be paying. But luckily, she told me that they were going to pull my credit again before we close on the house. 45 to 60 days before you close on the house, I believe it was. They'll pull your credit score to update it, because your credit scores only last for a 90-day period, I believe it is. I can't remember the numbers exactly, but it only lasts for a certain amount of time, and then they'll have to re-pull it to get an updated score. With that in mind, I was excited because I knew I was still working on my score, and I was able to get it higher so that I could get the better interest rate and the entire just better package period. So the ideal credit score to get the best bang for your buck would be a 740. So that's what me and Calvin were working towards, getting our middle scores at least a 740. So in this subdivision, there were over 40 floor plans for you to choose from, and there were only 3 model homes. Now, how do you do that? Like, how am I supposed to know what this really looks like? But I guess the model home gives you an idea, but I feel like, I don't know. I mean, that 1 bathroom, that 1 bedroom, that extra square footage over here makes a difference. And sometimes it's hard to kind of make that decision, because, you know, yeah, this model home looks like this, but my hallway will go this way a little bit, and those minor differences could make you change your mind about, you know, that particular house. But we had no choice in this situation. So we initially fell in love with a 4-bedroom, 2-bathroom house. I was kind of upset about it only being 2 bathrooms, but you know, I just went on ahead with it. That house was $267,000. The loan that me and Calvin decided to go with was a conventional loan. Now, with the conventional loan, you have to put 5% down on your home. So 5% of that $267,000 was $13,350. So that's the amount that we had to put down on the loan. That's just the down payment. So what they said our mortgage would have been was $1,850. Now, that does include your insurance, and then you have an escrow that your property taxes goes in, and all that good, beautiful stuff. So when they told me that our down payment needed to be $13,350, I completely freaked out. I'm like, I don't have that much exactly in my account right now, because I'm thinking, well, shoot, I'm getting pre-qualified. I need to show them that it's actually in my account right now. But she calmed me down and she told me I didn't have to have that much in my savings account at that point. I just needed to have it before the closing date. And I think it was about, again, 30 to 45 days before closing that you had to show them that you had that amount of money in your account. So I felt so much better after that. So the documents that I had to initially submit were 3 years of W-2s. It was my 2017, 2018, and 2019 W-2, or the last payment of 2019 if I didn't have that W-2. I also had to give them 30 days of pay stubs, and I had to give them 2 months of savings and checking account statements. So we submitted everything that they asked for, and things were going great. Now, with this being a new construction home, the entire process was going to take about 6 months. And that's because, like I said, they had the 40 floor plans already, and they were not customizable. It was pretty much, you know, what it is. Whatever it comes with, it is what it is. So that kind of shortened the process of having a home built. You know, I didn't have to pick doorknobs and cabinetry and, you know, what floors I want here, there, how I want the closet over here, there. So that's what made our process a little faster. The only thing we were able to choose was whether or not we wanted a fireplace, and adding a fireplace onto our home means adding $3,000 more to the cost of the home, which is not bad at all. And then the other thing that we were able to choose was the color of our cabinet, and whatever color cabinets we chose is what floor came with there. So moving along, we were still working on our credit. I mean, saving up our money. We ended up saving $15,000 in 3 months. Okay, we were moving quick. Our closing date was July 16th. We were super excited about everything, and then guess what? Coronavirus happened. Yes, the pandemic happened, and guess what? We were no longer working. I was laid off from my job. Kelvin was about to start a new job, was unable to start it. Nah, that's a whole different story about everything that we went through. So if y'all want to hear more about what happened there, I already recorded a video on how God saved us from losing it all. Make sure y'all check it out. I think it's up here. Make sure y'all check that video out if you want to hear more about what happened as far as that's concerned. So anyway, moving along, that 4-bedroom 2-bathroom house, guess who was not satisfied with it? Me. I just could not settle on getting a home that only had 2 bathrooms. So guess what we end up doing while jobless in the middle of a pandemic? We upgraded to a bigger house. That house was about $287,000, and that was for a 4-bedroom 3-bathroom home. So I just stepped out on faith, and I believe I wanted the house that I truly wanted. I didn't want to have to settle for anything, regret it, and be ready to move like that. So I just did what I had to do. So since this was a totally different house, that means that they would have had to start building it at that point, which I think we upgraded in April, May, something like that. So that ended up moving our closing date back until September. So I mean, I wasn't upset with that because I needed to get a new job anyway. Kelvin had to get a new job, all that good stuff. That gave us more time. With this house upgrade in the price, that means that the down payment that I had to come up with had to increase, but it only increased about $1,000. So our down payment was, I think, $14,320. Again, that's just the down payment. I think I only had to pay $2,000 in fees on top of the down payment because since I used the in-house lender, they paid $7,000 towards my closing costs. That actually would have been about $9,000. So at this point, me and Kelvin had to come to the table on closing day with a check for $17,320. So at that point, it's pretty much a waiting game until about 45 days before our closing date. And at that point is when they start to ask for updated documents like your updated check stubs, and that's when they update your credit score, all of those great things. And that's when they want to see that you have that money in that savings account. So it was only by the grace of God that we ended up getting jobs just in time for us to close on our house. I'm telling you, it was it was a miracle, okay? So because we were starting our jobs around the time that we were closing on the house, and in fact, I started my job on the actual day that we closed on the house, but we had no check stubs that we could show them at that point. So what we had to do was we had to show them our offer letters that included our salary and all those great things, so that we could prove to them that we still had enough money to be able to manage our mortgage and make sure we don't lose this house. But we still were required to submit our very first check stub to them once we got it, and they gave us 30 days to do that. So when they pulled up our updated credit score, guess what it was? We had gotten to a 757. We met our goal. We reached a wonderful credit score, and that meant that everything else was going to be looking great too. Our mortgage, our interest rate, all of that. Because of that wonderful score, we were able to get an interest of 2.75% on our mortgage loan, which is great. And that was the lowest that our originator said that she had seen in a long time. She had to hurry up and lock us in quickly so that we could get that rate. When you get these mortgage loans, you have to pay insurance on your mortgage. That's not insurance that's due for the home. That's just mortgage insurance. And so with the conventional loan, if you put 20% down on your home, then you do not have to pay mortgage insurance, which then brings your mortgage that you pay every month down. Now, if you didn't have the 20% down payment to put down on your house, by the time that you have 20% invested into your house, you no longer have to pay that mortgage insurance. So we didn't want to have to pay mortgage insurance every month. So we opted to pay a one-time premium fee of $5,000 so they don't put that on our mortgage every month. But let me tell y'all something also about that upfront mortgage insurance payment. So because our scores had went up so much, we only had to pay half of what the original mortgage insurance premium was. So at a score of 666, we would have had to pay $10,000 and some change for that one-time upfront premium mortgage insurance payment. But because our scores went up tremendously, we only had to pay half of that, which was the $5,000. Because our scores went up so much, that took about $500 off of our mortgage payment. So I'm telling y'all, getting your scores up to that 740 will help you out so much in everything. So that's one of the things that I really suggest everybody work on doing before jumping into a house. Now, some people, you don't want to wait too long to get those scores up that high. You just want to get to where you can so you can get your house. And I understand wanting to get into a house, but I just want you guys to get the best package that you can when getting into your house. I want you to be comfortable, you know, have that wiggle room to go out and live and do everything else, because one thing we don't want to be is house poor. We don't want to be living in a house, but then we're living from paycheck to paycheck. So that's one reason that getting those credit scores up will give you more room to breathe, because that means you'll more than likely pay less. Like a 620, you'll be paying more than a person with a 780. So work on those scores, guys. And if you want to hear more about how I did that, then make sure you check out my credit repair video, how I did it all on my own, did not pay anybody to do it. I know this was so long, you guys, but I mean, it was a 8-month process. We started in January, we closed on our house in September. So it was a lot of information to share with you guys, and I didn't want to leave anything out because I know every little detail could help somebody out there. If this helped you in any way at all, drop it down in the comments and let me know so I can know to keep on giving you guys this type of information and sharing our experiences with you. We've been in the house for about 5 months now, and we have not done an official house tour. I know, shame on me, but let me tell y'all, I have been ordering things and trying to wait for things to come in. Because of COVID, a lot of warehouses had shut down and deliveries on things are just taking a long time. So that's kind of why I've been waiting to show you guys our house. but I know a lot of our family and friends, they were asking if we have a registry and all those great things. So we're gonna do a house tour, and we're gonna drop that at a later time. Give us a few more weeks, y'all. My house not gonna be completely done, but I'm gonna just show y'all where we at, and then we'll just update y'all as we get more stuff. So I also put the information to my loan originator right down in the description. Make sure you check all her information out there. She was absolutely phenomenal. She is the reason that we knew that there was some kind of premium we could pay off our mortgage insurance and not have to worry about that. She is the one who told me to go ahead, keep on working on my credit score. So she was really phenomenal, and I truly suggest that if she works in any of the areas that you guys are looking for a home, then you need to check her out. Other than that, that's all I have for you guys today. Thanks so much for watching, guys, and until next time, see you later. Peace.